Welcome, folks. This is the More Money Show on WABC Talk Radio. I'm here with my friend Scott Bessent, who is the CEO of Key Square Management and is an expert on the financial markets and has been a longtime supporter of the Committee to Unleash Prosperity. Scott, great to be with you.
Good, thanks.
So
Steve.
let's get right down to it. You put out a really interesting report that's getting a lot of attention. Confirming what Donald Trump said the other day, which is when Trump said, well, this rally in the stock market is really a Trump rally, and you have some evidence to show that to be true.
Yeah, and you know, to emphasize, I have political opinions. This is a data-driven
Right.
financial opinion, and there are two pieces to this. Is we teased out the data. So since 1952. In a year when there's an incumbent running, the market's always up.
Why is that?
So because I'll give you the second part first.
Yeah,
then,
okay.
Is because the administration apparatus is pumping liquidity,
including the Fed.
Yeah,
right.
Well, especially the Fed.
Yeah.
And
why do they do that?
They want their guy to win.
Okay, got it.
And
Okay.
so they're putting their finger on the scale.
Right.
And we'll come back to this. So that's not unusual. Janet Yellen is appointed by President Biden, and she wants him to win. What is unusual here is the amount of what is being done.
Mm-hmm.
We are reaching dangerous levels, especially given the debt levels. But on the other side,
at some point they could probably go too far, right? I mean, crash the market for doing this.
Sure.
Right.
Is too much of a good thing.
Right.
But the other thing is, in my note, I said we're at the nirvana stage now because we have the Yellen apparatus pumping money, but we also have Trump ahead in the polls.
Right.
So now the market is anchoring on November 5th.
So they're looking ahead and saying, hey, if Trump wins, it's going to be good for stocks.
Yeah. Look, I don't have to tell you, markets live in the future.
Yes.
Earnings estimates, interest rate forwards, the commodity curves. And so they're looking forward to November 5th, lower taxes, Trump tax cuts,
less regulation,
less regulation, energy independence,
pro-business policies,
and the market also gets very unsettled by everything we're seeing abroad. So a more muscular foreign policy that quiets things down are all bullish.
So as I looked at your chart, it seems to show that as Trump's odds of winning go up, so does the market.
Yeah. So for the past 14 months, when Trump has been ahead in the polls, cumulative, the market's up 35%. When Biden's been ahead in the polls, it's up 3%.
Now, 1980, you mentioned every election year. So 1980 was, of course, that famous election when Jimmy Carter ran against Reagan. Was the market up in 1980?
Well, see, you're good because what I think is so interesting about 1980 is if we go back and look in the incumbent election years, that's the year the market was up the most, and Carter
in
lost.
1980.
Yeah.
But that's a weird one because Reagan didn't really run. That was a close race until the last week. So there wasn't a big Reagan.
I think it was kind of after. We went back and looked, and it was after the Republican convention, and then remember, kind of after the debacle in the desert.
I do remember that. Yeah,
and that's when the market took off.
So you're saying,
but I'm saying, they can pump in the liquidity, and maybe they were most desperate in 1980. So the market was up 26%, but Carter still lost.
Wow.
So
it's amazing. So the other question, of course, you mentioned, obviously the White House is political and the actions of the Treasury Department and so on are going to be, it's a political agency, but the Fed is not supposed to be a political agency. And I get asked this 3 times a day. Is the Fed political?
Sure.
And I want your answer to that.
So I'm glad we're here together because I have a different answer this week than I had last week.
Okay.
Last week, I was very careful to dissect between Yellen, Treasury, political apparatus, arm of the White House, Fed,
Right.
Powell,
Right.
implicit bias.
What's that mean?
It's not overt. They lean one way. Let's say most of the Fed staff are in D.C. and New York. Voters in D.C. and New York, especially D.C., vote Democratic 90-10.
Yeah, right.
So, it is there.
There's an implicit bias.
There's an implicit bias.
So,
but Jay Powell gave this interview on
I saw that,
60
yep.
Minutes. And I actually think on one matter, he didn't realize what he said. And on the other,
what was that?
When he came out and said, he was saying, America has a tradition of immigration, which we do, but he came out and said the recent immigration was one of the things that helped get the wages under control. So you have the chair of the Federal Reserve saying that immigration suppresses wages.
Yeah, I don't actually think that's true, but nonetheless.
But more importantly, that when he it showed me that he is overtly biased. So I've changed my opinion. He came
You mean
out
unbiased in favor of Biden. Now,
sure.
that may be the case given that Donald Trump also made a statement in recent days saying, I will not reappoint Jerome Powell, which may not have come to a surprise by Powell, because every time I've talked to him, he's always said he thinks Powell was one of his biggest mistakes. Do you think it was a mistake?
Yes. Yeah.
I mean, he took the inflation rate to 9%, the highest in 40 years.
Look, the two financial positions, Treasury and Fed chair, are risk management positions.
Right.
And the Fed did a terrible job of risk management.
Okay.
And
They did.
What Powell said the other night was the interviewer in 60 Minutes said to him, well, wasn't there a lot of spending that caused inflation? And he said, well, there was the CARES Act. So that was $2.2 trillion.
Out of 6.
Exactly.
No,
he didn't bring up the other three.
Yeah, right.
So that tells me, because that was all done under Biden,
Yes.
and it was unnecessary. Like the CARES Act, we were still in the throes of COVID.
Right.
All this was just goodies.
So this is an investor show. We only got 2 minutes left. So inflation, what's your forecast? What's going to happen?
Well,
with inflation?
I think mechanically it will go down into May, and this is
To what?
core, but probably below 2.
Really?
Yeah.
Wow.
This is core PCE.
Wow.
And the other thing too is, historically, when a part of the world is deflating like China is,
Yes.
so China's exporting producer price
Right.
inflation. Wages in the U.S. are still relatively strong.
Right.
Although, if you look at the wage data last week from that blowout number, is the government is crowding out the private sector. So government wage growth was higher than private sector wage growth.
And by the way, government employment has been running ahead of private. The only two big sectors of the economy that grew last year in employment were healthcare and government. So we're growing in the wrong places. In the last 30 seconds, because I get to ask this every week on this show, be bullish, be bearish?
As long as Trump's ahead in the polls, I'd be bullish because Yellen, Powell are going to keep pumping. And
Trump's going to win.
And
you think Trump's going to win?
He's ahead of the polls.
All right. Folks, this is the More Money Show. We are actually in New York for a dinner with Tulsi Gabbard. But Scott, you've been a longtime friend of the committee. Thank you for your wisdom. And we will be right back.